There are going to be some major changes in credit reporting and credit scores for the year of 2025. This is going to affect everyone. On today's video, we're going to cover 3 major topics that are going to affect millions of Americans with credit reports and credit scores that you do not want to miss. But before we get into this video, make sure that you smash that like and subscribe button so this video gets out to more people so everyone can be aware of these major changes that are coming. So we're going to start at number 3. You do not want to miss number 1 because that is a huge one for Americans out there. The number 3 spot is going to go to buy here, pay here apps. So now you've probably seen you can walk into Walmart, you can walk into almost every single store now, and you're gonna see something for like Sezzle, Affirm, Afterpay, Zip, or PayPal's Pay in 4. All of those are what we call buy here, pay here apps. Now, in the past, they would do a soft inquiry to get you approved for whatever it may be. I mean, I'll be honest with you, almost everything that you can purchase online, including through your Apple Pay, you can put something on a payment program. Well, in the past, it was just a soft inquiry, and it didn't really affect your credit, and it did not report to your credit reports. Now, some Affirm accounts actually did, but not all of them. Now, what is going to happen is Experian, Equifax, and TransUnion are going to make a big push to start reporting these types of lending accounts on credit reports, which can be damaging. A lot of people are gonna be like, no, it's gonna help me. No, it's actually not, because these are a lot of short-term loans. It could be for 6 months, 12 months. Remember, every time that you add a new account to your credit profile, you're reducing the average age of credit, which drops your credit score. So there's some people that have 1, 4, 6 of these buy here, pay here loans, and if they start reporting them, you can do the math, it's going to tank your credit score. A lot of people will ask the question, well, why is it starting now? Why didn't it do it before? Well, they did for a little bit, and then they disconnected from it because it wasn't technically an actual credit product, because it's so new, it's a fintech thing, and they didn't have a way to report it. And then the credit bureaus are like, yeah, we can help you guys, because again, if someone doesn't pay, there's no recourse to damage their credit, because that's what lenders want to do. If you don't pay, you got to pay the consequence of your score dropping. If you have a late payment on that item, you got the consequence of your score dropping. The true way to get to an 800 credit score is to have the least amount of accounts with very low balances. So when you continue to add these buy here, pay here now accounts to your credit profile, then that's going to continue to drop your score. I hope that gives you a little bit of clarity on those, because this is huge news. Now, the CFPB was previously working on regulating this area because there is no regulation, because it's a new product. It's a new type of lending that didn't exist before. And of course, the Trump administration stopped them from doing all work. So there isn't gonna be any regulations on this type of lending, which is kind of wild. Now, in case you did not know, Elon Musk was working to create a buy here, pay here platform for X, otherwise known as Twitter for the people that don't get it out there. Because a lot of people don't even know that Elon Musk helped create PayPal. So he's been in the payment sector before, so he knows that there's money in it. So if he could turn X into a buy here, pay now, pay here place, I mean, that's billions of dollars in revenue. And of course, the CFPB caught on to it, and they're like, hold on, man, well, what are you gonna do? You're not even a financial institution. And on top of that, there's a lot of other government agencies that are going after a lot of Elon Musk's companies. So this makes sense why he's trying to target the CFPB, because he doesn't want it regulated. Now, moving on to number 2, medical debt. Medical debt has crippled millions of Americans, and there is literally over 15 million Americans that are being affected by medical debt on their credit reports. There is legitimately over $49 billion worth of medical debt on credit reports. So the CFPB came out with a new rule to stop all medical debt from reporting on credit reports, which 1 out of 4 Americans would see their credit score go up by average of 35 points if the medical debt was removed from their credit reports. Now, the CFPB has 60 days from its announcement to make this go live and then regulate it and force this new rule upon the credit reporting agencies. But here's the big but, as there always is. The Trump administration, along with Russell Vought, sought to shut down and pause all actions at the CFPB. So now we have to sit here and wait to see if this ruling is going to be reversed. I want to give a special shout out to all my beasters out there that are working hard to fix their credit using Dispute Beast, the most advanced AI credit repair software ever created. And specifically to Wesley, Wesley's credit score went up over 226 points after just 2 rounds with Dispute Beast. And also Marcus's credit score went up 337 points after just 2 rounds with Dispute Beast. And let's not forget Richard's credit score went up 446 points after just one round with Dispute Beast. Dispute Beast is going to be pinned at the very top of the comments and in the video description for anybody that needs to fix their credit. Last part's the most important. So 15 million Americans are at the whim of the Trump administration saying, no, we're gonna close the CFPB. Yes, we're gonna keep it open. I'll be honest with you, I don't see them trying to keep it open. This is gonna turn into a legal battle that's gonna drag out. But I promise, I will stay vigilant and keep you up to date in any changes that are going on with the CFPB so we can track this and give you an update as to when to expect that type of relief. But here's the big but. You can still dispute it and tell them that the ruling is active because it is technically active. So dispute the hell out of those medical debts to get them off your credit reports, because if this gets reversed, then you could have possibly wasted your shot. Now listen, I want to be super honest with you. If this goes through, we're going to see an unprecedented amount of lawsuits coming from debt collectors, because if they lose the leverage of having this on your credit report, what else do they have left? They're just going to try to sue people. But I bring hope, as I usually always do. I have some resources that I'm going to drop into the video description. There is a company called $4.org. Again, they're called $4.org. They are a nonprofit. It costs you $0. They will try to help you reduce that bill all the way down to zero and get it wiped away, or try to reduce it as low as they possibly can. There's going to be another resource right underneath that that's called Healthcare Reformed. So you have other healthcare resources that you have for any crazy outstanding medical debt out there so you don't get sued. Now, taking over the #1 spot is Fannie Mae and Freddie Mac are going to switch over to using Vantage 4.0 credit scores. Now, Credit Karma shows you a Vantage 3.0, so this is a little bit slightly more updated version of the Vantage scoring model for only home lending. Now, hear me clearly. This is only for home lending with Freddie Mac and Freddie Mae. Now, in case you didn't know, they were the reason why the housing market crashed in 2008. They put out a bunch of bad loans out there and caused the entire economy to crash because people couldn't pay for them because they were predatory loans. I don't know what other way to say that to you. This is exactly why more than 90% of lenders will use a FICO scoring algorithm of some sort, because it is more predictive of any type of issues you may have on your credit profile with your finances. As of 2025, Fannie Mae and Freddie Mac have been under the umbrella of the US government, and that contract is about to end and it will have to be renewed. Will the Trump administration renew them? If they do, we will lose all regulations that they have against Freddie Mac and Fannie Mae, which could potentially mean that they're just going to be out there lending out money to all these people and getting people houses that they can't afford. A lot of people are stating also that FICO 10T is going to be used more by lenders, and I'm going to tell you right now that's not true. Now remember, you have to understand something. With any credit scoring model, every single lender must adhere to it. It has to start using it. Auto lenders are not going to use something that's going to get them less approvals. If auto lenders and credit card companies start using FICO 10T, they're going to get less approvals. But on the other hand, mortgage lending, if you have more mortgage lenders using a Vantage 4.0, the predictability of it is going to be completely different and potentially getting more people approved that shouldn't be approved. But on the positive note, it could mean that people that previously could not get into a home can possibly get into it, but can they truly afford it is the big question. And if the CFPB doesn't come back alive, then we're gonna have a bigger problem, because then there's not gonna be any type of regulation or any watchdog in the mortgage lending sector. But let's be honest with each other here. Nobody, and I mean nobody, should be trying to purchase a home right now at the current rates that all these homes are costing. And then you have high insurance, high taxes. It's just an unaffordable housing market. You should not be shopping for a home right now. You should be focused on getting your credit score up as high as you possibly can to be prepared for a better housing market. Now, a lot of people are gonna argue with me like, no, you're telling people to stay away from generational wealth. No, I'm trying to teach you to stay away from financial traps, because this housing market is just that, a really bad predatory financial trap. Pay attention to what's going on in the housing market in Florida and Washington. It is collapsing right in front of us. People cannot afford their homes because insurance rates are skyrocketing, taxes are skyrocketing. They're going from having a $3,000 mortgage to a $5,000 mortgage overnight, and now they can't afford it, so now they're trying to get rid of these houses and sell them. So sit tight, work on your credit, get your finances in line, and be prepared to pounce when the time is right. So I hope you enjoyed this video. We covered another big one on 3 big changes that are going to be coming to your credit scores and credit reports under the Trump administration. Now make sure that you watch this next video, because it is about all the awesome things that the CFPB is doing that you may want to learn more about. And if you felt that I brought you some value in this video, make sure that you don't forget and subscribe to increase your credit score.